Started here. Thank you everyone for attending the Green Industry Accounting webinar. My name is Carla Iniguez. Some of you may know me from the Landscaping Accountant Facebook group. I'm the owner of Cycle CPA, and we perform accounting services for the green industry. So anything from bookkeeping to more CFO level services, and we are specializing in this industry. So I'm excited to have you here today and going over some key items for this industry on the financial side. So whether you're first starting off your business or you've been in business for years now, there will be some key items that you can take away to implement in your business tomorrow. So let's get started here. All right, so we'll go over key financial metrics for the green industry, cash flow forecasting, and entity structure selection and tax implications. Green industry KPIs. So you would want to track KPIs in your business because it really will help you improve efficiency, productivity, control your expenses, and really highlight areas for growth. KPIs are different in the green industry depending on the services that you're providing. For example, maintenance versus design and build have different KPIs and they vary. That's why it is so important to keep track of each class item in QuickBooks Online or any other software that you may have. Classes are, for example, you can departmentalize within your business. For example, your profit and loss within your maintenance the department or your design and build department and so on. I was speaking with a client the other day, and year over year, we were facing losses in their one of their departments, and we decided to, okay, let's get rid of that department because in another area they were excelling, and so we want to invest in the other area more, increase advertising there more, and by dividing these segments up and seeing where the profitability lies can help you make those important business decisions early on. Green industry P&L metrics. Again, these P&L metrics down here that you see on the chart is green industry averages. So these may vary on the services that you're performing, but if you're performing a little bit of everything under the green industry umbrella, these are some good averages to go off of that you can go and look at tonight, your profit and loss, and compare and contrast. Starting off with cost of services. So cost of services is anything that is directly related to you providing your service. So for example, field labor payroll, right? That's directly related. Equipment rentals, fuel expense. That's one thing that I always see that's missing on this end. And they're not being categorized correctly under cost of sales. Others include job site materials and so on. Your gross profit margin really is directly related to your estimating your field labor efficiency because gross profit, it's your revenue minus your cost of sales. And if your gross profit is high, but your net income seems to be in line, that may be because you're missing something in those cost of sales category. Like I said, I see a lot of the green industry business owners that they're missing fuel from this line item and so on. And this makes it hard to compare apples to apples. Selling general and administrative expenses such as your utilities, things that you use on the operational side, such as marketing, your day-to-day stuff, and your net profit margin, which is managing both cost of sales and your SG&A. So we're going to get into labor efficiency KPI, right? Because we know that labor is the biggest cost in the green industry. So it is important for business owners to know if they were over or under job hours that they had budgeted for a specific job, so that we can get more accurate in our estimating process. So for 2020, the green industry average employee compensation field labor was at 37,000. We have 48 working weeks per year. You have your 37,000 divided by the 48 weeks. We get $781 per week. Divided by 40 hours, that leaves us with $19.5 per hour per employee. And so let's say that we had estimated a job where one employee would be working at 18 hours. Again, we're working with very simple numbers here, but this methodology could work for your crews and so on. So one employee working at for 18 hours would give you 351. That's what you already have estimated in your job for labor costs. Let's say that that employee actually took 23 hours to complete that job. They went over budget. That's no good. So now your labor expense is actually 448, which is more than we had estimated. And therefore, it's directly affecting your bottom line, your net income, your profitability from this job. In scenario number 2, we see that the employee actually just took 15 hours. So they performed this job more efficiently and faster. And at 15 hours, your labor cost was only at 292, but you had estimated it to be at 351. And so that just added $97 to your bottom line. Consider this. Consider giving that employee $40 more of a bonus for finishing that job under the budgeted hours, because this gives them an incentive to be more efficient in their future jobs. And also, if they're more efficient in jobs right now, they can continue and work on other jobs that may be outstanding. So creating a dashboard within your company, a financial dashboard, keeping a scoreboard for your company. You know, we all went to elementary school and we got our report cards. We were graded. We got an A in science, I don't know, a C in math. We were measuring ourselves, seeing what we needed to be better at. And so that having that financial scoreboard in your company, that's how you're going to measure yourself in your company. If you're not keeping score, no one's going to keep score. And so adding this labor efficiency measure onto that scoreboard being one part of that, right? It can really drive and stimulate growth and efficiency, because it's human nature that your workers will want to excel and go over their goals. So having that scoreboard can really incentivize them to do better. Having them work towards a goal and meet those goals and surpass those goals can be very efficient and cost effective, and therefore improving your bottom line, right? So here's an ADP labor report. We can see here that ADP said, 73% of employees in the green industry get paid overtime. 73%, guys. This is crazy. And only 8% get paid bonuses. And, we want to make sure that we're giving them bonuses instead of them going into overtime, because that's more money on your end that you're spending, and it's better to, again, incentivize them rather than them going on overtime. All right, so I just want to give a quick shout out to $1 Million Academy. We're talking a lot about numbers today in your business, but really having that structure, those policies and procedures to build your team. And so that way you can grow and scale your business. Knowing your numbers is so important in building in those policies and procedures. And that's exactly what $1 Million Academy does, helps you have those established policies and procedures in place, knowing your numbers, and in essence, being able to grow your business. So for our attendees today, we're going to be sending out tomorrow a free download of covering your costs and items that you should be on the lookout for. So be on the lookout for a link to that free download provided by $1 Million Academy tomorrow. Another key performance indicator, okay, accounts receivable. What is accounts receivable? It's work that you have performed, expenses that you have paid, labor, everything, but you haven't gotten paid for that job. The invoice is still out there. And this could be a huge cash flow detriment because, again, you have expense, you have spent the labor on it, you have spent the material on it and everything, but you haven't received the money from that project. So how do we read an AR aging report? In your current section, those are invoices that are not due yet, right? 1 to 30, those have been due 1 to 30 days already, and so on. I recommend to my clients, 60 days or over, consider not visiting the property anymore, because then they'll be able, to pay you faster if they see that you're not servicing the property. Don't be afraid to add any late fees to any of these clients, because in essence, you're really being a bank because you're loaning them money for this period, because you're not getting paid for performance that you did, and that's not right. So I would recommend to look over this AR aging report at least twice a month. Like I said, it could be a huge cash flow detriment to your business. So we've been talking a lot of the past, measuring historical metrics and going back. And it is very important because by going back, we can see what we did and what we did right and what we did that was wrong, and we can improve for the future. But we also want to think about looking into the future. And one of the ways that we can do that is by utilizing, cash flow forecasting, so that we can make those strategic business decisions within your company. What is cash flow forecasting? So in essence, we are projecting revenues and expenses for the future. Any cash inputs, so it can be revenue, it can be loans that are yet to be received, expenses, your overhead expenses, your direct costs, and everything like that. Don't be confused with cash flow. It's not profit. It's not an accounting, from an accounting standpoint. It's literally from a cash in, cash out standpoint. So business owners who do not monitor their cash put their business at risk. 81% of businesses that fail cite cash flow as the main reason. So this is something that we do for our clients. We project cash flow for the next 6 months to a year. And the method that I'm going to show you today is not the method that we use in our accounting firm. It is, but our method's a little more complex. but this is a great starting point if you're going to do it yourself on an Excel sheet. So you will need the last 3 months. So for example, if we're starting in January with the projection, you will need October, November, and December's revenue numbers for 2020 and 2019. So we're using a historical trend method. And we need those numbers to determine the percent change. And the reason why we're using October, November, and December is because those are the most recent months, and we can determine the percent change, the rate of growth that you're growing at currently. And so in this example, we can see that October to December 2019 revenue for this particular company was $30,000. October to December 2020 revenue was $52,000. So we plug that into our percentage change calculation and we get 73%. So they're growing at a rate of 73%. Now we're going to need our January 2020 revenue, which was 723. We take that number, we times it by 1.73%, the growth rate, and we get $1,250 projected for January in sales. So that's this number. And so for cash in items, of course you have your sales, and I just described how you can forecast your sales, and you can use that for every month. I know I just went over January, but this can be done for February, March, April, and so on. Any cash in items. So you have loans received, if you expect to receive investment income. Another thing that I see is that you're actually contributing to your business. That would be another cash in item. And then you want to forecast your cash out, right? So you want your overhead costs and your direct costs. You want to project that for the following months. And so that you would do that down here under the payments section. And the way to project that is simply by looking at your financial statement, because your expenses are driven by your sales. And so whatever percent is per line item, that's what you're going to project out based on the 1,250 here. So you can just look at it as a percentage of sales from that point. Okay, so here we have your total payment of $12,000. Let's say, your overhead and your direct costs come out to $12,000, and then you come out with this negative $11,000 number. So that is just your receipts in minus your cash out. So we're at a little bit of a deficit here. But then you plug in your opening cash balance from your bank account, your bank ending in December 31, 2020. So you started January off with 15,000, and then the difference is your 38. And you do this for every month. The 38 becomes your opening balance here in February. So the great thing about cash flow forecasting is that you can really play out scenarios with this. So for example, I had a client that wants to open a new office. Therefore, we need to hire more administrative staff and so on. So how does that look like? And let's plug it into the model. Let's plug it in under wages and salary. We're going to open the new office in the next following months. Let's plug that in. And let's see if that's doable with the cash flow that's coming into the business. How does that look like? Another scenario could be like, hey, Carlo, I'm going to make a huge purchase. I'm going to purchase 2 trucks in June. Can I do that? Would that be the smart decision to purchase in June? Maybe not. Maybe we hold off till July. July looks like a better month to do that. And so we can add various assumption layers, depending on advertising costs. We can increase revenue, let's say. And that really helps us make those important business decisions, especially when we're trying to grow and scale our business. We want to have that peace of mind also with the seasonality of it, that during the winter months, we're going to be able to cover our expenses, our salaries, because we have planned out for that. In essence, what we're really doing here is creating a budget for every month, but instead of it being stale, we just look back at it and say, oh, well, that was great. I know 2020 has taught us that life changes, things change. This cash flow forecast moves with you. And so therefore we can continue to plan in a dynamic way, right? And so we want to have that peace of mind during those winter months that we're able to cover our expenses. And let's say that in April, we're seeing that there's a cash shortfall. Since we're predicting this ahead of time, we can come up with ways to avoid that. So here we have a visual display. So one of the apps that we use with our clients is a float app that you can use as well. This syncs with Xero, QuickBooks Online, and a couple of other accounting softwares, where this is one of the visual displays of cash flow here that you can see, because sometimes we're tired of looking at numbers all day. We just want a visual display. How does that look like? So we turn to this here, and we can see how our cash flow is moving on a dynamic, like I said, and we're adjusting this month to month, right? Because things change. Moving on to entity structures. So whether you're just starting off in your business, or you're going to start a green industry business, or you've been in business for many of years, this is something you definitely want to pay attention to, because it can have ramifications on the legal side and also on the taxation side. An LLC. So an LLC is great because it gives you limited liability. So it prevents other people from coming after your personal assets. It's a flexible taxing structure. So I get questions about this all the time. An LLC is actually a legal entity. It's not a taxing entity. So an LLC can be taxed many different ways. It can be taxed as a sole proprietorship, as an S corp, as a corp. So that's one of the great advantages of an LLC. The greatest advantage is that it's flexible. It moves with you. A sole proprietorship. One of the greatest advantages is that it is easy to form and maintain, and it also has little startup costs. So if you're just starting, I think this is great, because in many states, you don't have to pay a lot to form a sole proprietorship. One of the biggest disadvantages is that you don't get that limited liability protection, and you might be paying all your earnings are being subject to self-employment taxes, which is around 15%. And so that's a hefty number. Partnership, again, easy to form. And with a partner, you can have a shared financial commitment with them. So it's not 100%, you contributing to the business. And one of the disadvantages is that you have unlimited liability, in which general partners can become personally liable for the actions of other general partners. Also, the accounting and tax is a little more complex. an S corporation. So an S corporation, one of the biggest advantages is that you get step up basis in it. And what does that mean? As your business continues to be open for years, you will build up your retained earnings that will increase and therefore increase your shareholders' basis equity, which reduces your tax liability, especially if your shares will ever be sold in the future. So that's something that you may want to think about if you're planning to sell your business. Also, another advantage is that you pay less self-employment taxes. Not all of your earnings are subject to self-employment taxes versus the sole proprietorship. Another disadvantage is built-in gains. So if you do sell an asset of an S corporation and it's sold within the 10-year period of the S corp election, you will be subject to built-in gain tax. So you want to be aware of that. So you have a corporation here. You get that limited liability. And also it is great for raising capital because it is preferred by outside investors. You also get some good tax benefits from that as well. But one of the biggest disadvantages with the corporation, it's costly to maintain, and it's also double taxation at the corporate and shareholder level. Great, so we're at the end of the slides here. If anyone has any questions, please ask in the chat box, and I will do a short Q&A here with answering a couple of questions. And if you would like to contact us about anything that we spoke about today, implementing any of the strategies into your business, please feel free to send me an email at carlap@cyclecpa.com or give me a call at 838-384-0463. And we'll move on to the Q&A portion here. So someone's asking, can we see the first page again to see what the percentages were? For sure. Let's go back. Oh, and again, you will be getting an email of the video. So if you didn't get a chance to write everything down, don't worry, because you will be receiving a copy of this video. So here are the green industry averages for cost of sales, gross profit margin, SG&A costs, and net profit margin. Again, this is good if you are providing multiple services in the green industry. For example, if you're providing a mix of maintenance, landscaping, design and build, this is the green industry average. So for cost of services for maintenance, we can see it being more at 65% versus irrigation more at 56%, design and build 62%, snow removal 66%. For gross profit, we see at 39%, like I said, that's the average, but getting a little more granular for maintenance, we more see it at 34%, irrigation at 43%, design and build at 38%. Trying to pick out another question here, so bear with me. yeah, so we will be sending out, I see a lot of questions about, will I get a copy of this video? Yes, we will be sending out to the email you use to subscribe a copy of this video recording. All right, let's go back to here. I'm trying to choose more questions here. So again, I know a lot of you had questions about the labor efficiency. That was strictly about labor efficiency costs. We did not factor in materials expense, fuel, and so on. That was strictly speaking about labor and labor efficiency. So the 19.5% I saw, the $19.5 an hour, that's just based on an average of what the green industry standard is for paying your employee. This can vary state to state and be more than $19 an hour that you're paying them, and maybe less. So base your calculation off of what you're actually paying that employee, right? These are awesome questions, guys. Awesome. So for the, I see another question here. For the cash flow forecasting, we do use Float, Float, and that directly syncs with your QuickBooks Online. We also use the cash flow tool. It really depends on the size of your business and where you're currently at and what you need in regard to cash flow forecasting so that you can make your budgets on there and project out your cash in items and cash out items. So those two are very good, just depending on the size of your business again. Yeah, so I have a question here. How is an LLC taxed? So again, an LLC, a lot of people get confused about this, is actually a legal entity structure. It's not a taxing structure. An LLC protects you from, if somebody wants to sue you or anything, they can't go after your personal assets. So you have limited liability. But an LLC actually can get taxed multiple ways. It can get taxed as an S corporation, corp, a sole proprietorship, and so on. So an LLC is really a good place to go because you have that limited liability protection, especially if you're, in this field where you're visiting other people's homes and so on. You want to make sure that you're covered on that end with insurance as well as the LLC corporate or S corp protection on there. Someone said, how would I benefit switching from an LLC to an S corporation? Great question. So an LLC, a single member LLC automatically gets taxed as a sole proprietorship. If you're a two-person LLC, it automatically gets taxed as a partnership. And so in both of those scenarios, your earnings are fully getting taxed for self-employment taxes, which is around 15%. It's a big number. So by switching over to an S corporation, you'll be saving money on self-employment taxes because not 100% of your earnings will be taxed for self-employment taxes. We use the 70-30 rule. 70% of your compensation will be run as payroll, and the rest of the 30% will not be subject to self-employment taxes. So that's how you will save, is by saving in self-employment taxes. And also by increasing your shareholders basis, like we went over. That's another advantage of the S corporation. Great questions here. Let's see. Someone said, how do you connect Float app to QuickBooks? So you would need to purchase a subscription of the Float app, and your QuickBooks must 100% be up to date, accurate financial reporting, and your accounts receivable must be up to date. Your bookkeeping must be 100% up to date. After that, you can, there's a syncing function in Float once you sign up, and you'll be able to make your cash flow projections. Again, with the methods that I showed you today, the historical trend method. As I mentioned, for our clients, we do go over this monthly, and we use a little more of a more complex method, but that the one that I showed you is a really good place to get started. If you're doing it on your own, even on an Excel sheet, you don't have to do it on the Float app. Let's try to pick out another question here. So someone asked, I also put all expenses in that software, so do I still need bookkeeping? Okay. Yeah, so if you're inputting your expenses on an accounting software such as QuickBooks Online, the reason why you may want to consider outsourcing that or using a bookkeeper or accountant or CPA is because you may not be categorizing your expenses correctly. You may not be accruing your assets for book depreciation and tax depreciation, your assets such as your mowers, trimmers, trucks, trailers, and therefore you may be missing out on some tax deductions there and some financial accuracy within your business. Like I said, with the gross profit margin, I see a lot of things missing from cost of sales, such as fuel, not separating your vehicle fuel from your equipment fuel, not putting in your field labor expense into that cost of services category. Okay. Let's see those questions, guys. If you have any questions, please feel free to jot them down here in the chat box. So someone asked, when starting your first business, how do we file our taxes that first year? What would we do differently than in the past years? So in the first year, you'll file your taxes accordingly to what your entity structure is. So a lot of the clients that we see here that are in their first year are DBA clients, so they're sole proprietorship. In the sole proprietorship, you file your taxes together with your 1040 and your personal taxes under a Schedule C. And so those go hand in hand. And then as you grow your business and it makes sense to switch over to an S corporation, you can make that decision, or maybe a partnership if you're going to take on another partner and grow and so on. So, the first year versus the next couple of years, it really just depends on what entity structure you're under. Awesome, guys. I see some good questions here. If you have any other questions, feel free to put it in the chat box now. I see you answered most of them here already. Awesome. So again, like I said, keep track of those key performance indicators, and please, please, please make a financial scoreboard for your business, because again, if you're not keeping score, no one's going to keep score for you. And that really motivates employees. Like, they want to work towards that goal. They want to surpass that goal and so on. So if labor efficiency is one of the metrics there, you know that you need to look at your accounts receivable. If you practice open book management and show your employees, some of your numbers, not all of your numbers, of course, and tie some sort of incentive to it. Like I said, like we saw, 73% of workers are in this industry are paid overtime. Only 8% are paid bonuses. So we want to make sure that we're incentivizing workers to work more efficiently. I hear this all the time from my clients. Their workers are purposely working overtime so that can make more money, and that is just not the route to go, right? Because that directly affects your bottom line. So having your scoreboard, that being one part of it, maybe your gross profit, another part of it, having that up somewhere in your office or in your home, and just keeping track of it, sharing with your employees, getting them excited and motivated to work is key. Awesome. So another point that I did go over, cash flow forecasting is important. You can use float. We do this on a monthly basis with our clients. We meet with our clients every month, go over their forecast, do that scenario planning. Like I had mentioned, cash flow tool is also great. Oh, I got a good question here. What are the biggest tax mistakes you see? So one of the biggest ones is that I see my clients when they first come to me, obviously, then we correct it. But I see them, and a lot of them are paying their employees cash, which is a huge no-no, right? They're not issuing those 1099s at the end of the year. And so we can't claim that deduction, the 1099 employees, because they're paying them cash, and we want to have those W-9s right when they sign up so that we can issue those 1099s at the end of the year so that we can deduct those in your tax return, right? So that's one of the biggest mistakes. Another mistake I saw, another client, revenue well over $1 million, still being taxed as a sole proprietorship. It's not good. We need to, switch them over to an S corporation, and that way we can save them money on self-employment taxes if that is something that's going to work for you in your business. So someone said, what are the most common, most recommended programs you recommend to use to run our businesses? So, obviously having your accounting software in place, so whether that's QuickBooks Online or anything else, to have that in place, as well as a third-party app, because you're always out on the field. and you need to be able to invoice from everywhere, from anywhere, schedule out jobs from anywhere, manage your team. And so I think anything that syncs with QuickBooks Online on that end, as far as invoicing and scheduling out jobs, such as LMN, Aspire, or Jobber, are great tools that sync in with your accounting. And so that way those two talk with each other and you can have everything under one umbrella. So that way QuickBooks Online is consistently being updated with what you're doing out in the field as far as invoicing and stuff like that. These are great questions. Let's see. So someone said, so at what point, dollar-wise, is a good time to move to an S corporation? So moving to an S corporation is never going to be like bad for you. It's never going to be, it's never going to hurt you. But you may want to consider moving over to an S corporation when you're at that 30,000 net income amount. That's when I recommend, just because an S corp is more costly to maintain, because you will need to run payroll for yourself, which is, I mean, it's not that costly, but I guess it's more responsibility, right? Than a sole proprietorship. You kind of mix personal with business. With an S corp, we have to be very strict with not commingling your personal expenses with your business expenses, right? So someone asked, any advantages to paying taxes quarterly versus any other? So when you're paying your quarterly taxes, you won't be subject to any fines or penalties at the end of the year for not paying your quarterly taxes, right? Because if you're mandated to pay your taxes on a quarterly basis, and if you don't do so, they'll calculate a penalty in your tax return at the end of the year for not doing so. Great questions. Let's see if I can find another one here. So someone said, can we change CPA any time of the year? So yeah, you can change at any point of the year for your CPA. Starting off the new year with the new one is recommended, and make sure that your old CPA knows what their responsibilities are, as far as maybe bookkeeping wise or taxes wise, when that service will end, when the other CPA will take over from there. But for the green industry, I truly do recommend someone that does know the industry so that they can help you with the financial side of your business and not just plug numbers in wherever, they feel like it, or maybe they're not accruing an asset and so on. So someone that definitely knows the industry, that's what I recommend. Awesome. So those were all great questions. Again, want to thank you guys for joining the webinar today. And I hope you did get a lot of value from this, something that you can implement into your business starting tomorrow. Take a look at your profit and loss statement tonight with those percentages that I presented. See how you measure up, right? And again, we will be emailing this video recording to the email you had provided when you first signed up, and I will email tomorrow morning the free giveaway from $1 Million Landscape Academy. So thank you again for joining, and I hope you guys have a good night. Bye.